Welcome back to Investing Talk Podcast. Today, we're tackling a question many of you have asked us to look into. Is Quantumscape a good time to buy now? We've taken a close look at all the available info on Quantumscape, the company working on that solid-state battery tech, really cutting-edge stuff. Our mission today is, well, to help you understand what's really going on with this stock. We'll break down the fundamentals, the evaluation, technicals, and the general market buzz. Before we really jump in, if you find these analyses helpful, please remember to hit subscribe, like the episode, maybe leave a comment. Your support means a lot. And hey, if you feel like it, consider buying us a coffee. Also, seriously, if there's a specific company you want us to cover next time, drop in the comments below. We love getting your suggestions and helping guide you.
Indeed, and we're here to sort of pull out the key insights from the sources on Quantumscape. It's important to grasp the nuances, It's potentially disruptive tech, but definitely high risk. What's really fascinating here is how much future hope seems baked into the price already, even though, well, they're still very early stage.
Right. It's not about today, it's about tomorrow, or maybe the day after tomorrow.
Exactly. It's all about what they could become years down the line.
Okay, so let's unpack this, starting with Quantumscape's fundamentals, future tech moonshot. What does that actually mean for their books right now?
Well, the core thing to understand is that Quantumscape is fundamentally a pre-revenue company. And that's not just jargon. It means, quite literally, they aren't making sales yet. Nothing. They're completely focused on R&D, developing and trying to scale up these solid-state lithium metal batteries. Think of it like a very late-stage startup, just, publicly traded. For instance, the numbers show a net loss around $471 million over the last year.
Oof.
Yeah, and about $114 million of that loss was just in Q1 2025. So profit margins, deeply negative. But that's completely expected for a company like this, pouring money into development and trying to build out manufacturing.
So huge investment, profitability way off in the distance, okay?
Mm-hmm.
But are they burning through cash too fast? What's their runway look like?
That's the million-dollar question, or rather the $860 million question. That's roughly the cash they had at the end of Q1 2025.
Okay, $860 million.
Which gives them a projected runway into late 2028. That's crucial. It means they have some breathing room, time to keep investing heavily in getting these batteries ready for market, without needing to rush out and raise more cash immediately.
And no major debt issues.
Sources indicate no significant debt worries right now. So liquidity seems healthy for the moment. They're basically buying time to innovate.
Got it. And what exactly are they spending that cash on? What's the tech that makes them potentially disruptive?
Right. Their whole position hinges on this emerging solid-state battery tech. The idea is it could seriously shake up the EV industry. We're talking batteries that could potentially offer, much better range, maybe faster charging, and improve safety compared to current lithium-ion. A big part is replacing that liquid electrolyte with a solid one.
Safer, charges faster, goes further. Sounds like the dream battery.
That's the promise. Their specific tech includes things like their QSE-5 cells. That's their next-gen design for better energy density. And also this new Cobra separator process. That one's interesting.
Cobra process? What's that?
It's a manufacturing innovation. It aims to boost the production efficiency of a key part, the separator, by, get this, 25 times.
25-fold. Wow.
Yeah, potentially a huge deal for making mass production cheaper and faster if they can get it working reliably at scale.
Okay, huge potential, but still in development. So, given all that, how on earth do you value a company like this? Pre-revenue, all future promise, traditional metrics are useless, right?
Exactly. You hit the nail on the head. Traditional stuff like PE ratios, price to sales, price to book, meaningless here. No earnings, no sales. Which really brings up the core question for anyone looking at this stock. What are you actually paying for right now?
You're paying for the dream, basically.
Pretty much. It's not about current performance. It's purely a bet on future disruption and massive growth.
So, if analysts can't use normal metrics, what are they saying about the price? Is there any consensus?
Well, this is where it gets really divided. The average analyst price target is actually quite bearish. It's around $5.19.
$5.19. Wow, that's way below where it's been trading recently, around $13.
Right. That implies like a 58% downside from those levels. Those analysts are probably focused on the near-term financials, the cash burn, the execution risks. But then you also see these really long-term bull cases mentioned in the sources. Some forecast maybe $28 by 2035.
$28, that's a long way out.
It is. And some even talk about over $100, but we're looking at like 2040, 2050 for that. Those models assume huge success, massive adoption of solid state, and Quantumscape capturing a big piece of it.
Hmm.
So the current market price, around $13, it reflects that high-risk premium, those speculative growth hopes. It's way above what most near-term analysts think it's worth.
A real battleground stock then. And that volatility must show up in the stock chart. It sounds like it's been quite a ride.
Oh, absolutely. Bit of a roller coaster is putting it mildly. The shares surged, from a 52-week low near $3.40 all the way up over $13 in 2025.
That's a huge run, like 150% year to date at one point.
Massive gain, though it has pulled back a bit recently.
Yeah.
But yeah, that kind of explosive move is typical for these highly speculative names when any positive news hits, even just developmental progress.
So for someone watching the charts trying to navigate this volatility, what are the key technical levels to watch? Support and resistance.
Okay, technically key support looks to be around $11.50.
$11.50, okay.
And resistance seems to be kicking in near that $14 to $15 zone. Yeah. Based on the recent trading. But the big thing technically is its beta. It's 4.42.
Whoa, 4.42. That's incredibly high.
It is. It means the stock tends to move more than 4 times as much as the overall market, both up and down. Extreme volatility. So while the momentum in 2025 has been positive overall, pushing it up, it's also run up way past those analyst targets we mentioned. That increases the risk of a sharp pullback. There are definite signs of overextension, which could mean more near-term choppiness.
Makes sense. High beta, high volatility. So what's the latest news? And what's the general feeling, the sentiment around Quantumscape right now?
Well, their last quarterly results were pretty much in line with what people expected. They confirmed they're still investing heavily in scaling up, improving the tech, and specifically they mentioned integrating that Cobra process into their base production line. That was seen as, a positive step forward.
Progress, at least.
Yes. But Wall Street overall, the consensus remains largely sell or hold. There's still a lot of skepticism out there about the timing. When will they actually commercialize? Can they stop the losses? It's a very pragmatic wait-and-see attitude from many analysts.
So Wall Street's cautious, a bit of a mixed bag then.
Exactly. And you see that reflected in social media and news coverage, too. Yeah. There's definite excitement about the idea, the innovation.
Right. The potential is huge.
But also a lot of caution about the valuation, is it worth this much now? And the execution risk, and can they actually pull this off at scale? Everyone's really watching for the next earnings report. Q2 results are due July 23rd. That'll be key for any updates or changes in their outlook.
July 23rd. Okay, so that's coming up soon. What other potential events, catalysts, could really move the stock price in the coming months or years?
Yeah, that Q2 report is the big near-term thing. Its impact will really depend on what they say about progress and their outlook. Looking further out, say into 2026, the big milestones are the planned field testing of their QSE-5 battery modules.
Field testing, so real-world conditions.
Exactly. And also starting to ship samples to customers. Those would be huge signals that they're getting closer to commercial reality.
Yeah.
It could really boost investor confidence.
And beyond just the company's own actions, what about broader industry stuff?
Oh, absolutely. Any news about potential partnerships, especially with major automakers, that would be huge. Or hitting significant production scale milestones. And then there are the macro trends. Continued growth in EV adoption globally, governments pushing for better, cleaner batteries. Those are significant tailwinds.
So if the EV market keeps booming
and demand for next-gen batteries grows, Quantumscape is theoretically well-positioned. If, and it's a big if, they execute on the technology and manufacturing.
Right, the if. Which brings us to the risks. For something this promising, there have got to be some major downsides, right? Especially for a bet on future tech.
This is critical. And yes, the risks here are substantial. Anyone considering this needs to go in with eyes wide open. Company-specific risks. Well, those ongoing high losses we talked about, the fact that commercial scale production is still unproven lab success is one thing, mass manufacturing is another beast entirely.
Execution risk.
Huge execution risks on a brand new battery chemistry and manufacturing process. And of course, that cash burn. How long does the runway really last if there are delays? It's a race against time.
And what about risks from outside the company, the sector, the market?
Good point. Sector-wise, competition is fierce. You've got the existing lithium-ion giants constantly improving their tech. They're just sitting still. Plus, there are other startups working on solid-state or other advanced battery chemistries. It's not like Quantumscape has the field to itself.
Okay, so lots of competition.
Definitely. Then market risks, we mentioned the huge volatility, that beta over 4. Liquidity can also be a risk with speculative stocks sometimes. And finally, macro factors. A slowdown in the EV market, Supply chain problems hitting materials they need, changes in government subsidies or regulations,
Hmm.
all those could impact their prospects.
Wow, okay. That's a hefty list of risks. So let's try and bring it all together. We've looked at the tech, the financials, the market, the risks. What's our overall assessment of QuantumScape as an investment right now?
Okay, crunching it all down. Based on everything we've discussed, our overall assessment gives QuantumScape a 4 out of 10.
4 out of 10, so leaning towards the lower end.
Yes, it is definitively a high-risk, speculative stock. There's really no other way to frame it. It's best suited for investors who have a very, very high tolerance for volatility, sharp swings, and a genuinely long-term horizon. You have to be willing to wait potentially many years for this technology to hopefully commercialize.
Like a venture capital investment, but on the public market.
That's a great way to put it. Exactly.
So for someone who hears all that, understands the high risk, but is still considering it, what's a more prudent approach than maybe jumping in at current levels?
Well, looking at the analysis, we'd suggest the $8 to $10 range might offer a more reasonable risk-reward balance compared to current levels, $13.50 or higher.
$8 to $10, why that range?
It's closer to some of the key technical support levels we talked about, and it also aligns a bit better with those more cautious near-term analyst targets. It's clearly an investment profile for long-term holders, prepared for potential losses and prepared to wait patiently for the tech scale-up and adoption, short-term trading. Exceptionally risky here without very clear catalysts given that volatility.
And if someone ignores that advice and tries to trade it short-term anyway, any specific pointers given the risks?
Look, if you're going to attempt short-term trading, a very strict stop loss, maybe around $10 or $11, would be absolutely essential to limit potential downside.
Protect your capital.
Absolutely. And maybe think about taking partial profits if the price runs up towards that $14 to $15 resistance area. But always remember that high beta means things can turn on a dime. It's really crucial for anyone involved, long or short term, to watch those upcoming earnings results very closely and track any news on technical milestones, production progress, before adding any new money. Given how speculative it is and where it's priced now, cautious position sizing and robust risk management are just non-negotiable.
What a fascinating analysis of QuantumScape. It really highlights that tension, doesn't it? Massive potential innovation versus massive risk and uncertainty.
It really does. And it leaves us with a pretty important question for you, the listener, to think about. As EVs become more mainstream, how much will a truly next-generation battery, like the one QuantumScape is trying to build, actually revolutionize the industry? And perhaps more importantly, are we, as investors, truly prepared for the long, bumpy, volatile ride that usually comes with developing and scaling truly disruptive technology? It's a powerful reminder, I think, that breakthroughs often demand incredible patience and a stomach for a lot of uncertainty along the way.
That's a great thought to end on. Thanks for joining us for this detailed discussion today. We really hope this has given you a clearer picture of QuantumScape and helps you make more informed decisions for your own portfolio. We'll be back soon with more insights to help you navigate the investing world. Until next time, keep learning and keep asking those important questions.